Hey, good morning, everybody. How are you? Wednesday, bright and early, a little bit ahead of the market open. Let's get into it. Let's talk about some GameStop. Let's talk about what must have been a slow news day at the Bloomberg news desk yesterday. Looked like they tried to put a headline. Don't know if the reporter trying to pump their calls or what they were doing about GameStop. So I know that you probably all saw the headline because everybody carried it, and I'm not sure why because it A was old news and kind of not exactly accurate. So the headline: Ryan Cohen ramps up $1 billion GameStop bet with margin loan. That's not exactly what happened. I had posted yesterday, hey, don't get too caught up in this. Um, the reason is we already knew this on April 3rd. On April 3rd, with his recent SEC filing, we'll pull that up also. Let's see, because we had Larry's and then we had Mr. Cohen's. Let me get Cohen's here pulled up. This was the one from April 3rd. Okay. So we'll pull it up both. So we have it on the post. It's just wild. So I had, we talked about this on April 3rd. He'd purchased 500,000 shares at a price 21.55, yada, yada, per his new SEC filing. He now has 37,347,842 shares of GameStop, approximately 8.4%. Yes, we knew that on the April 3rd filing. So he previously owned this. Sure. Now this is where their Bloomberg is getting that information from for their headline yesterday, which I'm not sure why. As of the date hereof, which was April 3rd, 22,340,018 shares beneficially owned by the reporting person have been deposited into a margin account with Charles Schwab in connection with a standard margin loan agreement whereby margin credit may be extended to the reporting person. When you see this, for example, Jeff Bezos, Elon Musk, they own an incredible amounts of stock. They keep it in an account. They're not going to sell the stock. They're going to borrow money against their stock. That's what rich people do. Ryan Cohen is a billionaire. You're going to borrow money off an existing holding. So it's a pretty standard in that regard. The reporting person generally retains voting and investment discretion over such shares prior to any foreclosure on such shares that could be triggered in the event the reporting person fails to timely satisfy any minimum margins. So basically, what that says is if he fails to maintain margin requirements, they could sell those stocks on his behalf. But to be honest with you, Ryan Cohen's not going to do that. He's been buying GameStop shares for years. So he has the ability to have a margin loan extended to him. Doesn't mean that he took that. Doesn't mean that he's doing anything. So you can take that for what it's worth. He has his own money. Those shares were all previously moved to a personal account as well from his RC Ventures. So take that with discretion as well, because on January 27th, this is on the filing. RC Ventures, which had all the shares, was the manager. Da da da. The shares are just moved to Ryan Cohen. So instead of them being held indirectly through RC Ventures, they're now held directly with Ryan Cohen himself. So, yes, so you have all those shares. Sure, you pledge a few shares. That way you have the ability to borrow money, extend credit if you need it. It's a pretty standard thing, but I just thought I would talk about it because I'm not sure. I saw a lot of people, oh, he bought more shares. Oh, he's using the loan to do. You don't know that. Unless you're him and Charles Schwab, you don't know if he's even extended a line of credit. It's just what people do in this particular scenario. And I wanted to talk about it because you already knew about it. On April 3rd, it was there in the SEC filing. They told you exactly what happened here. So let me pull it up here. Dun, 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 dun. I'll make sure I'm on the right page here. Always seems to be a lot of filings here. It was on actually the 13G because he had to amend that because his ownership changed a couple points. So on that amended 13D, which I linked in the original post, that's where that information came from. These shares already beneficially owned, deposited in a margin account in connection with a standard margin loan arrangement whereby margin credit may be extended. You knew that already on April 3rd. So don't let Bloomberg trick you into something that you already knew. Anyway, enough about that. Let's jump over and take a look at the option flow. We'll take a look at the chart as well with the close yesterday. Let me see what that 2670. And let's see where we're trading at as of the time of the video, which is about a half hour before market open, 26.50. Still trading well above your moving averages, which we highlighted over there to the top left corner. Well above your 50-day, your 200-day, even your 9 and 21 EMAs. So volume was slower yesterday, so kind of indecisive in that regard to the candle, but did make a higher high yesterday in that regard. So yeah, something to be looking at, because the high yesterday 27.38, and then the high on Monday 27.18. So it did push a little higher. Yesterday we noted here with the option premium though, about 30 million premium. It's a little lighter day. Put premium remained kind of elevated there. Through net put premium around 400,000 most of the day, and net call premium declined to about 1.5 million to the negative. And we'll take a look at that. Some of the impact here. $10 calls for June, $10 deep in the monies, and those could be different strategies there. Somebody looking to get assigned and own some stock, someone looking to buy stock at that level, could also be a short seller using a deep in the money call to cover a position. So take all of that with a grain of salt. So some of the impact there. Notice the puts this week, and we'll take a look at that as well. So let's take a look more, kind of drill into that flow a little bit more. You can take a look here at the highest volume contracts yesterday that were traded. Again, mostly short dated for this week's expiry, which is tomorrow. It's a short week. The market closed for Good Friday. Futures and event contracts are open, but the general market is closed on Friday in observance of Good Friday. So a lot of short dated calls, the 27, 28s, and 30s, seeing activity like we talked about, kind of split between bid and ask. You got buyers and sellers, bought to open, sold to open. You got bought to close, sold to close. So there's four ways an option can run there in that regard. So nothing really too definitive. I see these 28 and a half calls, a little bit more ask volume than bid volume, and that's for tomorrow's expiry. So let's take a look at that here. About 100,000 in premium. I really like to look at things 500,000 or more. Sure, it was substantially on the ask, 4,300 volume. Didn't see a big increase in open interest. Somebody could have purchased back what they already previously sold, which this could have been part of a strategy and or when you see a mid fill like that, sometimes that can be part of a strategy. Let's see, April 15th had some multi, and then April 11th, you see that multi leg. So these sold at the bid, part of a strategy. So these more than likely could have just been bought back to close that position in that regard. So take that with a grain of salt. It wasn't like, hey, someone's loading short dated 2850s because they think the stock will move up. That may have been true. But when I zoom out first quickly, I see a large candle like this. I scroll down, I can see some multi-leg activity. And what that means is, we've talked about this before, that trade was not a single leg trade. It was connected to something else. And when you use unusual whales, it'll be really great job of detecting that. So here's that transaction of those 28 and a halves back on April 11th. And you see these up and down arrows. When you use the unusual whales, it'll denote it's a multi-leg. So we can actually look at all the sides of the trades here. And that was actually a full-blown strategy, to where they bought 26 calls and 22 puts, mixed expiries, and then sold 2150, 28. So kind of like a spread in that regard. So more than likely, the 2850s there that they sold, they ended up buying them back to close that position as they near expiry. So that's kind of, when you see flow, people will post, hey, look at this, they're loading calls, and then that's their post. I see it all the time, like, wow, who let them have an unusual whale subscription? You need more context. Because, for example, if I said, hey, look, they're loading 20 and 50 calls at ask, you might think, oh, I got to get in on this. That's not even what that means. They were probably buying those to close out a position. So you got to be careful. You got to be careful with those posts on X. A lot of people just post to get likes and to get their $30 in Twitter revenue. I think my account generates literally, I'll post it sometime, literally less than like $17, $18 or something in Twitter revenue every 2 weeks. All I care about, as long as it covers the $8 premium, I feel like I'm making a slight return on my $8 investment to X monthly. So that's how I look at it. Whatever. It doesn't matter to me. I make my money elsewhere. So, but yeah, here was your highest volume. You want to, pause or screenshot. You know the drill by now if you watch the videos. A net premium yesterday, down about 2 million. So the premium in itself was lighter for the day. We can take a look though, actually at where that money was spent. We'll take a look here for GameStop yesterday. I usually sort this by highest premium. If you've watched the videos before, you know how this works. We look for things about over 500,000 or larger. So we've seen $32 calls, May 16th, the largest premium here, followed by the 35s for January. I've been seeing those. 30s for June, 27th for this week, and then the 27 puts for May 16th. We'll talk about those as well. $30 calls. Seen some activity for October. Okay, let's look at that. See what someone's doing there for 30 for October. Hey, they might have added here. See, bought 550, maybe. Yeah, hit the ask for 550. 550 volume for 300 grand. A new open interest carried over to 530. More than likely suggests this was bought to open. Trader buying $30 calls, about 13% out of the money for October 17th expiry, about 308 grand. So kind of can almost confirm that with the increase in open interest. So this particular trader may feel that the stock continues to move up towards 30 by October. So yeah, nice $308,000 transaction. Buys 550 of the $30 calls. Not bad. Not bad. I like the sentiment. Let's see what else we got here. Let's look at those $27 puts. So can't always be bullish. Can't always be bullish. Can't ignore that either. That's what I thought. See, I saw these yesterday. 1,800 volume on the $27 puts for May 16th, so your May expiry. 465,000 premium yesterday. Note, they were mostly filled at the ask, which suggests bought because volume did exceed open interest. And open interest did increase today, 1,500. If we look at that candle yesterday, look at that trader. Bought 1,551. And he bought the ask. It's a bearish. Trader here is betting on the stock to not be $27 by May 16th. Trader could be betting on volatility. Trader could be betting on, GameStop to retest, a $24 level like previously seen. But something to keep an eye on. No multi-leg, 304, about a $400,000 trade here. Let's actually look at it. Other people just post it. I'll take you to the real-time flow. It went down at 8:55 and 10 seconds Central Time, Chicago time. 1,500 right here. Bearish at the ask. Okay. Where's the rest of them? Let's look at it. Candle volume 1,500. All right. Let me zoom my time frame in here. Make sure. Yeah, 1555, 1552 in new open interest. So let me remove this time filter here real quick. And let's find the big ones here. There's the 1,500. Larger order there. And sometimes too with the current, like the volume was way larger than open interest. These filled at 255, exactly the ask price. So it'll get denoted on usual wells. More than likely, trade was to open, buy to open, sell to open, determined by the size of the trade. So they slammed the ask in that regard. And I thought I saw a flow alert to that, and we'll get back to that as well. So, yeah, there's a little bearish trader involved there. Could be a hedge against an existing position, so you never know. You always got to take it with a grain of salt with the flow in that regard. Let's see what else on those $32 calls for May. We saw 8,000 volume yesterday. Open interest, though, increased. So there's 1 million in premium yesterday. There's some buying and selling. In a mix, a little bit more ask side activity than bid. If you were to say 4,200 ask volume, an increase about 4,600. So there could be traders that feel GameStop will close below 32 by May 16th, and they sold some of these calls to capture some of that juicy premium with a 96% IV. Some traders feel like, like we had originally highlighted, these 32, 33, and $31 calls a couple weeks ago, it could just be continuation of that trend. Bullish traders may be continuing to add to those positions. Because we first noted those back on April 11th when they started jumping into those. I think there was some activity before that too. Yeah, April 10th and then April 11th. So traders might have been adding a little bit more in that regard, trimming positions the last couple days. A decrease in OI contracts could have changed hands. So something to consider there in that regard. And then about 1 million in premium. with about half of that appearing in new open interest. So, yeah, suggested there that those traders might be continuing their bullish stance on the stock, or at least, an upward move or some volatility. And we look also at the $30 calls for June. These have been part of call debit spreads we had previously highlighted, as well as some like short calls. So you did see some volume yesterday, about 600,000 premium, a little bit increase in open interest. So nothing too, hey, this is what this is, or hey, this is not what that is. Could just be more traders adding. It was a little bit slanted toward the ask, so suggesting more buying than selling. But again, it is a combination of both in that regard. So I'll let you take a look at that. We'll look at those 35s for January. Again, same scenario. I saw that yesterday. About 900,000 premium. Cool. Which is kind of that range above 500 that I look for. Of that volume yesterday, 1,623, about 1,400 appeared new open interest. So yeah, there was some selling, maybe of the $35 calls for January. Out of the money, about 32%. But there also more than likely was some purchase as well. So if we look out, zoom out historically on this, been a little bit of activity picking up the last couple weeks on the 35C for January. But originally, some of that stemmed back here in March when the contracts were at $330 a piece. So, for example, I could have been selling them back here at 400, or pardon me, buying them. Could be selling them up here at 575 for profit. So yeah, always a few ways to look at the flow. Let's take a look here. Go back to our net flow real quick. Take a look at that gamma profile and see how things have changed since yesterday's option activity. And then we'll take a look at our changes to open interest this morning as we wrap up here. We talked about that spot gamma here. That's a little. Yesterday was about 3.3 million shares, still hovering around that 20 million mark. Basically, for every 1% change in price, it's going to be about $20 million for market makers to like hedge the positions essentially. So if they sell calls, they got to hedge with shares. Sell buy puts, hedge with shares exactly. So as we talked about, as the stock moves up to where more of these calls then become in the money, it applies gamma pressure and then produces upside pressure to the stock. But conversely, for example, if the stock moves down, that pressure of these higher strike open interest calls decreases, and that can create the downside pressure as market makers may let go of some of that hedging, which would, like I said, would create further downside pressure on the stock. So a lot of times we've seen where I've showed you in the flow where you'll see like a couple million come off the table in net call premium because somebody closed the position. Then you'll see some volume come with that, and this stock moved down. It was just some additional downside pressure from the transactions occurring within the stock. But the gamma still very much exists, above the current stock price of 26 and some change. It still very much exists there at these higher levels. Does it mean the stock will go there? No. But stocks sometimes have a way of gravitating to where that gamma is or avoiding it altogether. Last year, 25 was a tough level. Seemed like this year was a $25 level was a tough level to pass as well. And you've seen some 26s, 27, and a new higher high yesterday, 27.38. So for those that need a refresher on spot gamma exposure, it's right there. You can pause, take that information in. And then if we go over to the gamma here, take a look at that as well. It's really, like I said, it's been ramped up at 25. It's there, 27, 28, very up there, out there at 30. So, the stock moves anything above yesterday's high, 27.38, to 28 or 29. That makes all the 27, 28s in the money. 29s then go in the money. 30s are approaching at the money. Yeah, you saw this last year. This is exactly what happened last. I'm not saying this is what happened and will happen. I'm just saying when you see a bunch of call options and a gamma ramp kind of building in that regard, and is building into May and June like it was last year, as the stock moved up, additional upside pressure, FOMO, more people buying calls. You saw what happened. The stock really did move up, and that's the power of gamma. Sometimes that can happen. So your highest concentration in net gamma right now, currently focused on this week expiry, lingering a little bit for next week, and still remains there for the May and June expiry. Which, as we get closer, you'll see that probably start to increase as well. The largest GEX by strike and expiry, so your largest net gamma at the 25, as well as that put gamma is right there too. And then put gamma exists there 25 and a half, 27, thanks to those put buyers yesterday. but still pretty strong positive net gamma on in regard at those strikes as well. So yeah, you just kind of watch it each day. You watch the volume. We continue to monitor the option flow, continue to monitor the news, the chart, the volume. That's what you do. That's all you can do. You can take your best hypothesis, take all your data, and try to formulate a plan that works best for you, your investment objectives, your risk management, and how things line up, with your goals, with what you're trying to achieve here. But yeah, I mean, we talked, I know about I posted a chart, I think. It was just kind of a quick chart a few days ago. Let me scroll to that here on my feed. Give me just a second. About just GameStop maybe getting back, to that earnings gap in that regard. Let's see. Oh, yeah, here it is right here. Oh, that was I don't know if you saw that yesterday. Unusual whales. We had talked about the 540 puts as traders were piling into them as the premiums flipped. So premiums here yesterday just boom, all of a sudden puts just spiked. They nailed the 540s. Truthfully, I tailed at 125s where I entered and time stamped and filled. They ran to 300. Dropped back down to entry and then ran over to 370 high, I think, again in that regard in the day. So that was pretty awesome. We got you in on AT&T at $40 calls a week ago for the $26 calls for this week. Got you in at 40 on an alert. They hit 160 yesterday. Not too bad. I know. I try to help when I can. All I want to see is people make a little bit more money and lose less. That's the name of the game. Where is that post? Let's see. Saw that forward activity. Okay, here it is right here. April 14th, I posted in the morning, 10 o'clock. GameStop trying to close the earning gap, strong positive sentiment, recent insider buying a ton of cash on the books, bullish option flow, $25 to $30 gamma levels, building a May and June OPEX with a strong move above the 50 and 200 days. So we're at the 2707. Yeah, starting to move up on that gap though. So we look here also at our daily chart. They're kind of moving right up in there. Right back into whoop, whoop, and filling that up. You've seen the stock here before, so it's not a surprise in that regard. So, last time we're kind of here, and we go higher, we go lower. I'm not sure. It seems like every time we go lower, we zoom out here on like the 4 hour. Anytime you go lower, bulls jump in and defend the stock. So let's see, anytime RSI reset, which granted I know is a lagging indicator. But anytime the stock draw down, let's see, March 13th, low 21.56. Bulls stepped in ahead of earnings, sent it to near 30. Post earnings and convertible notes and Bitcoin arbitrage and all the sentiment mixing up and down because people had misinformation, didn't know what they were talking about with those notes. But that's for a whole nother video. But again, the lows, 20.73. Bulls jumped in again on each of the lows with higher volume and defended it. So, yeah, I mean, is the floor 20? Probably. Is it 22? I don't know. Is the floor 25? I don't know. It is what it is till it isn't. The trend is your friend till it isn't. I'm not sure, but let's see how that short volume's. It's been pretty much flat and decreasing every day since the main initial arbitrage. So, as you'll see that work out. So, as GameStop gets closer, potentially to if GameStop gets closer, the conversion price, what was it, 29 and some change on those notes. Today you'll see some additional hedging within the stock as well. But yeah, that's what I got for you today in the flow report. So everybody watch the video, I do appreciate it. Thanks for tuning in. Friendly reminder too, Unusual Whales got that 15% off sale. It ends on next Tuesday. So if you want a discount, click that scan that QR code with your phone, or use the link, either which way. Yeah. Let's see here. About 10 minutes till the open. We'll get this uploaded for you. And I'll be around on the internet. We'll find you here and there. And a few people had asked me about whales and setting some things up. I saw your DMs, so I'll get back to you there. Appreciate everyone checking out the videos, and hopefully it helps you if you're watching them. I know they're longer, and I'd conducted a poll also about, should the videos be here? Should they also be on YouTube? The responses were pretty almost identical. Yes, here, or yes, YouTube, or on both. So I think we're going to move forward with the dual upload. So more to come on that soon. I think you'll like that also if all the videos are over there on YouTube. They'll still be posted here on X, but I think there may be benefit for the dual upload. So if you did watch this video all the way through, you're awesome and I appreciate it. Just reply to this post, dual upload, and I'll know you watched today's video all the way through. But y'all have a fabulous day. Happy Wednesday, and remember, short week, market close Friday, and we'll see you around real soon.